And I was telling Jeff, I couldn't make my mind up what subject I want to talk about, so I'm going to ask you guys. I got one on economics, current economics, and why we are, where we are, that kind of thing. I've got an expansion from Jeff Lee's critical race theory. That's a pretty good one. But I ain't got time for both of them. Which one would you rather hear?
Economics.
Economics. Critical race theory. Critical race theory. And I actually had another one that's called Connect the Dots. And that's a pretty good one. This might be a little bit too political for everybody, but you know, it's just out there. But to begin with, on the economy, who's in here old enough to remember Jimmy Carter's response to inflation? So you got two.
Yeah.
Donna kind of remembers.
Thought I wear a sweater.
You had a button. You had a button that went on your shirt, and it had WIN. With inflation now. Remember that? Okay. What was his other one? The double nickel. 55 speed limit on interstate. Remember that? Gave the truckers a fit. And the third one was, we had to post a plaque in the bank saying that we would comply with the regulated thermostat controls. Remember that? Remember that, Corporal? Yeah. What was it, 62 or something in the wintertime?
Come on.
I'm serious. That was the then Democratic administration's response to the highest inflation we've ever had. I got a chart somewhere on that, but get the stuff out of the way.
What was there a particular event that triggered that, or was it just the inflation that we had at that time? I mean, you know, we've had inflation that's been triggered by, I guess, overspending now and other things. But I was wondering, was there something? I don't remember what was tied to that event.
One of the biggest contributors to that inflation was the price of oil. With the Saudis and the OPEC raised their rates.
When the cartel went together.
Yes.
Okay.
Exactly. That led. And you would think we would have remembered that, but we didn't. I don't remember anything.
That one had all embargo, and that was in the early 70s.
Then it led into the 80s when OPEC raised their price. Just to show us they could do it. Who can tell me what the T-bill, the 1 month Treasury bill rate was a year ago, April 22nd?
All right, less than 0.25%.
It was dirt. 0.25.
Oh, even less than
That was the T-bill rate a year ago. You know what it is now, today?
7 something.
No, 4.56. Okay. What is the percentage change from 0.25 to 4.56?
A lot.
1,824. Okay, percent change. And that, if we have time, we're going to get into the effect that particular thing has on the balance sheets and the crisis. Well, it's not really a crisis, but the implications of a crisis in the banking industry today. What did that 1,800% increase do to their balance sheets, and why? These are things we may not talk about.
Walt,
Yes, sir.
if the Treasury decided to recall those bonds at 0.25% at par, that would have solved the problem, wouldn't it?
Yeah, but why would they do that?
Well, I'm just asking you. That it seems like they're going to get it. The government's going to end up bailing out everybody that knows what's up.
That would probably be the biggest bailout of history, Harold.
Okay.
I did that. I mean, I don't know what that would do to will do great things to the banking's balance sheet, but I don't know what that'd do to the economy as far as the inflation rate. Because that's make-up money there. I mean, that's what they do. They make it up. So, I mean, people don't understand that 15% of the money in circulation is the cash, and everything else is digital. I mean, all right, while we're on that subject, if I go to Donna and I say, Donna, I need $10,000. How about depositing in my checking account? Where did she get that money? Glenn knows the answer to that one.
At the computer.
She made it up, created it. That's the creation of money. That would be M1 creation. Boom, it's made it up. When I pay it back, it goes away. Did y'all know that? Didn't take out of Betsy's account. Just made it up. Anyway, we ain't got time for that. Y'all got me off track. Number 2, heard something this morning that I liked a lot. Elon Musk was asked by Carlson, Tucker Carlson, who he would like to see as the next president of the United States of America. And his answer was, a normal person with common sense. Isn't that the best answer you've ever heard?
Yeah.
Certainly. Number 3, what did George Washington think of the political party system, two-party system?
He was against it.
He was absolutely against it. In his first inaugural address, he addressed it. Washington believed that political parties could lead to the establishment of despotism, the alternate domination of one faction over another, political parties. He wrote, quote, natural to party dissension, which in different ages and countries has perpetrated the most horrid enormities, is itself a frightful disposition. But this leads in link to a more formal, permanent despotism. The disorders and miseries which result gradually incline the minds of men to seek security and repose in the absolute power of an individual. That's scary as death. What he's saying there is the two-party system will ultimately get to a point where when this party's in power, they're going to beat up on this party. And this party's going to get power and beat up on that party. And that's all they'll end up doing. Is that what we're seeing today? That's what you see on the news today.
There's no longer any consideration of a loyal opposition.
No. And there's no consideration whatsoever for the other ideas. I mean, it's all part of that system.
In the Byzantine Empire during the reign of Justinian, there was a two-party system, the blues and the greens, and they each sponsored chariot teams. And the chariot races would devolve into riots. The riots were political.
Everything's political today. Everything that you see going on, all the little silly things that are going on, all the big serious things that are going on, they're all politically driven today in our society, which is what Washington here thought was a problem. And he was right. Well, let me give you some clarity on the economy here. This was a speech given February of this year at Hillsdale College. Now, I still encourage you folks, if you have not gone out to Hillsdale College, go to their website and look, because it's really good stuff. Just about everybody on Wall Street knows, despite what you read in the financial press, that the Biden administration's economic, it's going to get a little political here, but it's really information. Biden's administration's economic policies are driving our economy into a recession ditch. In a recent Wall Street Journal survey of 23 financial institutions that do business directly with the Federal Reserve, 16 predicted a recession in 2023 and 2 predicted a recession in 2024. while only 5 predicted that they would avoid a recession, even though those 5 predicted we'd have only 0.5% economic growth and we shoot for 2. We've had 2 for prior to COVID and during the Trump years. We had 2, a little over 2. In the past 20 years, we've averaged 2.1. So that's pretty good in the last 20 years. The recession is defined traditionally as 2 consecutive quarters of negative economic growth. At least it was defined that way before the financial press redefined it prior to the 2022 midterms, ensuring that despite 2 consecutive quarters of negative growth, President Biden's policies couldn't be labeled recessionary, so they changed the definition. But regardless of the definition, this negative growth meant declining standards of living, fewer job opportunities, lower rates, and increased poverty for the American people. Overall, we have become a far less vibrant and far less prosperous society on the verge of a serious recession. And there, in my opinion, we are where we are, and there are 5.7 trillion reasons for that. And that is the money that was given to everybody for COVID relief. 5.7 trillion. That's 5,700 billion. Think about it. The hard economic times we're experiencing are especially striking as they come on the heels of the Trump boom, which opened our eyes again to American economic potential when we have low taxes, reduced regulation, and bountiful supply of domestic energy. Everybody, particularly minority and low-wage earners, reaped the benefits in the Trump years of abundant job opportunities, increasing wages, historic highs in family income, historic lows in rates of poverty and unemployment. What was going on there, and what happened, what killed that? COVID, actually. And then COVID come right after Trump's imposing significant tariffs on China. Just something to think about. Consider some of the other metrics. In 2019, the last year before the pandemic, median family income grew to nearly $73,000. It went up by $4,600 in that year, a 6.4% increase over 2018, the largest annual increase going back to 1967. That amounted to 45% more growth in 1 year than the 3,200 increase that the Obama administration achieved in 8 years. That was 1 year versus 8 years. And contrary to what would become an election year talking point, the economic benefits were widespread. Listen to this. Every racial group experienced a record high median family income. This is 2019, the end of Trump years. For white Americans, it rose 5.7%. For black Americans, 7.9%. For Hispanics, 7.1%. And for Asians, 10.6%. As incomes grew in 2019, the poverty rate plummeted 1.3 percentage points to a 60-year low. The lowest poverty rate since the government started reporting the statistics in 1959. This lifted 4.1 million people out of poverty. For comparison purposes, during the 8 years of the Obama administration, the number of people living in poverty increased by 787,000. And again, the decrease in the poverty rate under Trump disproportionately benefited minorities. Poverty rate decreased 0.8 percentage points for whites, 2 percentage points for blacks, 1.8 for Hispanics, and 2.8 for Asians. The year 2019 should be remembered as the year of the worker, and that wasn't due to mandated wage increases, racial reparations, climate regulations, tax increases, or any other redistributional policies. Working class Americans saw their circumstances materially improve in 2019 because of policies that encouraged economic freedom. Where are we going with that one? Turning the clock ahead since March 2021, 2 months after Biden took office and began reversing Trump's economic policies, the Consumer Price Index, the average in prices paid by consumers for goods and services, by which inflation is commonly measured, has surged, and it continues to surge. Representatives of the Biden administration say that inflation is coming down. They're playing word games. I'm not going to get into that. From month to month, inflation may be going up at a somewhat slower rate. That is the rate at which inflation is increasing. Might be down from previous highs, but the increases are cumulative. The dollar impact of each month increase adds to the prior month's increases. Even though the rate of increases is moderating, it still remains well above levels seen prior to the Biden presidency. The Federal Reserve aims to keep inflation around 2%. They got a ways to go, which is roughly where it was during the Trump administration. It's now 6.4 is when this guy wrote this. Granted, the Federal Reserve has to take some of the blame, and in my opinion, the Federal Reserve always acts too late and always acts too long. We may see that in this case. If we do, then our chances of a recession are significantly increased if that's the case. It failed to react in a timely manner when inflation started to set in. And you would think, and I hate to say this, but you would think that the folks that we put in the power, let's say that are nominated to the Federal Reserve, the folks that are empowered to take care of our economy and make sure we move on a smooth basis. You would think that those folks went to school somewhere where they learned that there's only one reason for inflation. Milton Friedman said it 100 times. There's only one reason for inflation, and that is the printing of too much money. And what was our response to COVID? $5.7 trillion. So you would think they would have figured that out and may have been out ahead of that curve, but it didn't happen. Let's see. It failed to react in a timely manner when inflation started to set in. Remember, everyone insisted that inflation we were experiencing was transitory. Remember that word? It turned out to be anything but. For that reason, since last year, the Federal Reserve is increasing interest rates at the fastest pace since 1980. It intends to continue raising rates because inflation has proven so persistent and widespread, and the longer these interest rates continue, the more inevitable it becomes that they will suffer a deep recession. Raising of the base or the Treasury rates, T-bill rates, is the main tool in the Federal Reserve's toolbox for them to combat inflation. And I told you at the start what the percentage increase has been over the last 12 months in T-bill rates. And what that ultimately does on banks' balance sheets is all the investments on the bank balance sheets, all the assets as investments. They have loans and they have investments on their balance sheet as assets. Loans typically turn out okay when rates go up because some of them are variable rates, some of them reprice and reprice at a higher rate. So they do pretty good on the loan business when rates go up. But when rates go down, what happens to the value of their assets out there in treasuries and mortgage-backed securities and those things? So when it goes down. How much does it go down? I'm going to give you an example. And I'm not even, I can't do the math on the 1,800% increase. But let's say I went in the treasury market and bought a 5-year treasury a year ago at 2%, just 2%. And now the 5-year treasury is at 4%. Let's say I bought a $2 million block, 5-year treasury, 2% coupon rate. What is it worth today? If I had to sell it, what would I get for it?
Today?
Mm-hmm. Exactly. I'd get $1 million instead of my $2 million, so I got $1 million loss in that transaction. Anybody got that? So these unusual low rates that we have been experiencing because of COVID and then the big crash that went on for those period of time, where rates got down to almost zero, has a significantly more or greater impact on the price of financial instruments. Because if you go from 1/4% to 50%, the same thing happens. Okay? But when you go from 1/4 to 4, it's a insurmountable. You can't sell those instruments anymore.
And that's why the bank closed. That's
By the bank, well, Silicon Valley was an unusual example. They had some other issues, but what happens, and I get on my business partner Ronnie, because he reads all this stuff about bank failures, and he's scared to death he's going to lose some money. And I'm here to tell you, and this is not part of this thing here, but the financial system is a fragile system, and there's no other way, because when we got off the gold standard, you know, it took on a life of its own. And then when I was in college, they started teaching you about deficit spending and that kind of stuff, which we embraced wholeheartedly, and here we are today. So the system is fragile in the fact that 15% of the assets or the liabilities, your deposits is out here in cash, and the other of it's digital. And so how do you make that happen? You have to make it happen. But if somebody walks into your door and says, I want my $2,374,000 in my checking account, put it in cash and give me a bag, and I'll walk out the door. Well, that ain't gonna happen. What happened in Silicon Valley was that they had some high-speed customers, for lack of a better term, with deposits. Oh, back up. $5.7 trillion. Where did that money go? It ended up on Donna's balance sheet. It ended up on Glenn's balance sheet, on the banks. They ended up with cash coming out the yang-yang, okay? Everybody had money. Everybody got money. So it's sitting there, and the rates are almost zero. What can they do with it? If they were smart, they would have realized that inflation was going to rear its ugly head, and they would not have invested it out 2 years, 5 years, 10 years, mortgage-backed securities or whatever. And of course, when rates go up, mortgage-backed securities maturities extend. So the question is, how much of that did they do? If they were smart, they didn't do much at all. They just rode that pony on down and see what was going to happen. But Silicon Valley was one of the few that, well, I'm not going to say few, was one of the first. They had these treasuries and mortgage-backed securities that had extended maturities, and I don't know how far out they went, but then they had these clients that were burning through cash in Silicon Valley, tech startups and whatnot, and they needed their money. So when it came time to give them their money on demand, they had to go sell those securities. Well, first they tried to raise money on the equities market, and they failed. They got turned down. That started an even more, I'm not going to use the term run because I don't like the term run. That started even more questions about their ability to survive. And so more people started taking their money out. They could not do it. Their only option at that point was to sell securities, and that's just like I said, you sell a $2 million security and you're going to get $300,000 or so for it, and you can't do a whole lot with that. So it was over. The FDIC looks around and they look at those folks, and when their capital position goes down, they mark the market every month to see where your capital position is going to be based on the value of your securities, and they went below the minimum. So what the FDIC does, and they did back in the big crash in 08-09, is they go around and look for folks like Donald who are solid, and they say, okay, would you be interested in taking over this institution? When I was with First Bank, we took over one in Wilmington that was almost $1 billion, but This one's a lot bigger. But that's how they do it, and it's a great way to do it. It's a whole lot better than what they did years ago. But I tell my partner, when you see this stuff on the news and you're talking about bank failures and there's going to be more bank failures, well, there probably will be, because I'm pretty sure there was a lot of them out there that got a little bit greedy and did that extension out when rates were so low to get a little bit of spread on their investment portfolio. But now every single bank of the 3,800, whatever they are in America, every single one, if they got any investments at all, has got losses in their investment portfolio. But that happens all the time. That happens every time a rate goes up. And when rates go down, they got gains in their portfolio. So it's nothing unusual. In this case, it was exacerbated by the really low rates caused by the COVID money. And now the inflation, which they should have known was coming. But anyway, that's where we are, and there's going to be more banks that are going to hit that wall. But what you see on the news is you see every now and then you'll see the newscasters hollering fire in a theater. And if you do that in a financial institution, it creates all kind of problems, just because it's tenuous and it's fragile. You can't be messing with it too much. It'll work out okay if you leave it alone. But boy, did y'all get me off track. Let's see. The second thing we knew coming out of the pandemic was that fewer people were working. If you tried to get anything done around your house back then, you would find first that you couldn't get anything done. Then you would find someone you couldn't get good material. So that was all COVID related, supply chain, all the money floating out there. Everybody got money from PPP and everything else, and now they're giving money out on this ERC. Yeah, I mean, that's a crazy business. It really is. So you had all those problems. Let's skip ahead. What did the Biden administration do when they first took office?
Tore up all of Trump's.
They tore up all of Trump's initiatives. They reversed them. The second thing he did was the American Rescue Plan in 2021. It's more money, $1.9 trillion, American Rescue Plan. Then, in 2022, the Inflation Reduction Act, another $800 billion. Okay. Let's see. This shouldn't come as a surprise. The New York Times Magazine headline following Biden's inauguration read, "The Biden team wants to transform the economy." During the campaign, Biden himself said of his plans, "I truly think that if we do this right, we have an incredible opportunity to not just dig out of this crisis, but to fundamentally transform the country." Transform the country. Who said they wanted to do that? I believe it was Obama. That's how the Democrats saw the pandemic as an opportunity for racial change. So a little more than a month into the Biden presidency, he passed the $1.9 trillion American Rescue Plan. This so-called rescue plan handed out more cash to American consumers, further increasing demand and discouraging work, further decreasing supply. This was economic suicide. It wasn't only obvious to the conservative free market types like myself, but Larry Summers, who was the economic advisor in the Obama administration, who served as Secretary of Treasury and Clinton, and as head of the Council of Economic Advisors under Obama, the former president of Harvard and a well-respected liberal economist, called this the least responsible economic policy in 40 years. Why did he do it? Politics. Everything that's coming out of Washington, everything is political. Your school's political now. Your churches are political now. this banking thing, and they're blaming it on everybody else, but that's become political, and that's why it's on the daggone news, is because it's become political. Everything in this country, every decision that's made in Washington is based on a political aspiration, and it's not for our benefit. It's for the benefit of the party. And it drives me nuts, it really does. And this guy goes on to make some points about what could happen, and what could happen is we kind of have to deal with where we are today and work ourselves through this inflation, which is not going to be easy, because we're still pushing money out there from some of those things that are appropriated during the COVID relief and the American Rescue Plan, and then the other one, the Inflation Reduction Act. All those things are still dribbling money out here and there, and so we've got some issues out there, and just to sum up, what concerns me the most is our national response to everything, and the slings and arrows that are being thrown at us as a nation for political means, legal immigration being one. I made a whole list of them. I don't know what I did with it, but this CRT, that's being thrown at us for political reasons, and there's some really bad stuff in that. Transgender stuff, all that's a distraction. All these things are being thrown out there into the system, and they're being politicized, and what it's doing is it's just keeping us from doing the right thing. And it drives me nuts. And if we don't ever get anybody to come back and sit down at a table in Washington to do the right thing, then this great civilization is going to be gone in a relatively short period of time. But any comments, any questions?
I have a question.
Shoot.
And I understand that the $7 trillion that was dumped on COVID came from the Trump administration.
He started it.
Well, he started it.
Yeah. But he only had 1 year.
If he had gotten re-elected, what steps could he have taken to avoid this?
I don't think he could have avoided this, Joe. I really don't, because they were throwing money out. The Republicans were throwing money out there in 2019 because they were scared to death. They didn't know what was happening. But I've thought about this a lot. I honestly don't think if we'd had somebody like Ben Bernanke in charge of the Federal Reserve when this happened, we would not be here today with these problems. When you start throwing that money out, you make that money up, and it goes out there, it creates all these problems I talked about. The low interest rates, the supply money, the lack of jobs, all that stuff is one reason, is that money. And I think we could have had better leadership. We could have had somebody other than who we had steering the boat through that storm. But we didn't. Right. And I think it's going to be a while before we ever make it to clear waters. I really do. I don't see because everything's political. People aren't concerned about this stuff. They're concerned about who's going to be the next damn president. So, anything else? Thank you.
Thank you, Walt.